Well, good afternoon, everyone. It's 20 to 3, just after the American Open, on a very, very wet afternoon here in West London and Notting Hill. Friday, the 11th of March. I'm looking at the US market, and as you can see, everything has been down for such a long time. Every measure of the trend on VectorVest is down. Short-term trend is down, underlying trend is down. We've got a confirmed down in place. The medium-term market timing signal, the DEW, is down, as I'll show you in a moment. And market moving up slightly from an oversold position. VectorVest does not advocate buying stocks at this time. Let's have a look at the overall market, and that's the VectorVest composite over the last 3 months. Let's look at 6 months. And I put on the medium-term market timing signal, the DEW, and I'll spare you the acronym. It's a very simple but robust market timing system, and as you can see, it's been on a sell signal here since the 5th of January. The longer-term system, the confirmed call system, has been on a down signal since the end of November. So we seem to be basing out here. We've now got this making falling tops, the indicator making rising bottoms, but it has to close above this moving average, and the DPO needs to get above 0 before we register a buy signal. So as we go into the trading day, we haven't even got a green light where the price of the composite is up day over day and week over week. So still a very bleak situation here, folks. And I haven't done anything, but I haven't wasted the morning, because I've been looking at stocks around the market, and this is what I've come up with. I have one position. That's not true. I've got 2 positions. I still got CF. I tried to get out at $100. I'll show you the chart now, but I missed, and I finally must get out of that this afternoon, I think. So let's have a look at these. There's MATX, CF, BSM, DAC, Hudson Bay Minerals. So they're in transport and in resources. First of all, the relative value of them all, apart from the tracker, which doesn't have fundamentals, is very high indeed. There's only one stock with a reasonably decent relative safety, because commodity stocks and oil stocks are subject to the ups and downs of the commodity cycle. One thing that's good about them all is that the percentage annualized growth rate next year is very healthy, well above the 20% that I look for. And if we go across here a little bit, we can see that the sales growth, which invariably is sooner or later reflected into the share price, is significant. The lowest one's Hudson Bay Minerals at 35%, which is still quite a clip. As you can see, CF Industries sales growth of 130%, which is quite something, quite special. As you know, there's a shortage of fertilizer everywhere. So if I go and chart these, that's MATX, folks, and this is my standard layout. It's got 21, 55 and 89. Although when I'm looking at charts myself, I rarely put them on, because I know where the darn things are, and after doing these things for years, I still forget to put that ringer off. That's earnings per share, and as you can see, let's look at it over a longer period. Earnings per share very healthy in this as well. Transportation doing exceptionally well. The moving averages, 21's above the 55, is above the 89. On a short-term perspective, it's pulled back to the last old top, which I like, and it's pulled back in a falling wedge type formation. If we have a look at a longer, we can see that there's a heck of a trend at our back here, so there's something cooking in transportation. We see that with Zim as well, pulling back a little bit today. The VectorVest valuation's up in the cloud somewhere. And let's last little look at volume. Volume still hasn't started to tick up, but very healthily in this push up. Volume was very strong indeed, and it volume is now it's going down on falling volume. A nice uptick here, and it's without a doubt going to come back and kiss that trend line. Institutionals would rather die than chase it, so invariably it's going to be a bid where that resistance is now going to become support. So that's something that I'm going to look for actively. It looks good to me. Do I know what's going to happen next? Of course I don't, but if the general market does turn, that looks to me as if there's another leg in it. That's my CF. Trading at 95 now. I tried to get out at 100 yesterday and the bugger wouldn't go there. As you can see, the fundamentals of the share are great. The VectorVest valuation is still a tad higher, but clearly there's a big line in the sand at 100, and maybe I'm being too darn greedy. I'm in from 72.50. That's the only decent position I've had in the last month or 6 weeks. This is Blackstone Minerals. Look at the volume going into this, folks. And somebody knows something now. If we actually go back to a longer term chart, we can see that it's just about to break out into an all-time high, and there's an awful lot of people who will be looking upon that as a cup and handle type pattern. So big volume going in at this push, at this breakout. That's a darn good sign. My moving averages are positive, and the VectorVest valuation again is up at 16. That'd be a nice little move. I particularly like, ladies and gentlemen, this volume as it pushes up. Again, do I know what's going to happen next? Of course I don't, but that's in the right place. I believe that negotiations with the fellows in the Middle East to pump more oil has fallen on stony ground, as it says. So that looks to me as if it's got more legs, ladies and gentlemen. And that's something that clearly one could, in fact, consider relatively easily without the general market turning, because that sector has been running and running strongly. Now, this is the Danos group. It's undervalued. Let me take the value off and let me go to look at this lovely rounding bottom, folks. And it's come back. And it's come back to the old high, and it came back once, bounced, couldn't get up, and then came back and changed again. Good today. That's a Wyckoff spring. There's volume in this bit. Those weren't bad. The price rose, volume rose. That looks to me as if that wants to go, folks. The obvious stops are underneath that low. Those obvious stops have been taken out already. That looks excellent to me. This is Hudson Bay Minerals, and it makes a great deal of kit that we need for ESG type applications, like this ascending triangle right at the end of this. This is a 6-month chart. Again, we put on the value. The value's up here somewhere. We look at earnings per share, but look at this volume going in on that breakout. I don't know what's going to happen next, but breakouts that occur on rising volume, and you can see back a day or two here, there was a big up day and good volume. That's saying that somebody wants to buy this, so it's pulling back to the old high. You couldn't expect anything else. If we look at a longer part, we can see there's a huge basing formation here on this. So again, the relative safety in all of these, apart from that first one, MATX, is low, and well, they're not for the faint-hearted. So those are some stocks. So let's go back and look at MATX. CF I think is extended. I wouldn't buy into it now myself, and I'm looking for an exit, and that hasn't updated as yet. I need to stream that. Okay, there we go, stream. So there we are. Hudson Bay Minerals is back a little bit. It's pulling back to that trend line. CF is at 95. MATX is moving up. They're all in buy recommendations. All have got great earnings growth, but apart from MATX, the earnings safety is poor. That's largely because they're all commodities orientated. So I hope you find that useful. I haven't bought into any of them yet. Let's look at, well, apart from CF Industries, and not a great change going on here. The S&P is up 27 points, 4287. Most of that was done on the pre-market, folks, and I haven't got a position as yet, but I would favor a short position, another leg down before this is over. I've been short of it most of the week using my faithful Wyckoff upthrust technique on an hourly chart, and that's been very profitable this week. So I hope you found that useful, and for the UK people, folks, I will do a UK video a bit later on, or maybe over the weekend. I haven't done anything, and I don't think there's anything to do. If anything, the UK market is weaker than the US market, and that's largely because the consensus seems to be that the US will actually get past these sanctions that have been passed on Russia with less side effects than we will across this side of the pond. VectorVest subscribers, just remember that our weekly Q&A won't be on Monday afternoon, it'll be on Tuesday afternoon, because I'm out of operation on Monday. And if anybody listening would like a listen, then just email me, david.paul@vectorvest.com, and I'll send you a complimentary invite. Thanks very much, everyone. Bye-bye.